Hello, everyone. Welcome back to the RationalInvestor.com's Daily Brief Recap. Kevin and I are sort of working with YouTube here on their new stream. Let's see. Hey, look at that. Awesome. So, Kevin is driving the ship here today, and looks like he's kicking butt. Sue, let's see what kind of damage we can do. Welcome back to the Frivolity. This is our little free broadcast that we do as a dovetail to our daily brief live show we do Monday to Friday on the site. Today, actually, and really what I like to do, and if you want to join TRI, I constantly tell all my students, everybody, my number one job here is to make you famous. I mean, I don't give a shit about me personally. I have no ego in this. But I absolutely love to see students basically learn the information that I've been privileged to be given over the past 20, 30 years, and then see them actually apply the information and be successful. It's, man, it just makes my heart sing. So, not only do I like to hire from within, that kind of thing, but also to promote. And I think Kevin here is well on his way. I think he's done well with the time at TRI. We were even reviewing. I think we figured he's been at TRI about 2 or 3 years. And actually, it's kind of interesting. On the weekend shows, I had almost 4. Okay, well that explains why you're so old and gnarly now. Anyway, he just replied there. 17, 18, 19, 20. Yeah, you're right. Yeah, I guess you're right. Anyway, he on the daily briefs, I get site people to come on and do presentation, and he talked to the community for probably a good hour today. We reviewed anything under the sun that could potentially make money. Everything from warrant and option ideas to much. We didn't really talk too much about options today, did we? We talked a lot about warrants, but a lot of penny stocks really popping. The breadth indicators are suggesting that the broader market kind of wants to turn up here. And of course, a couple of his ideas recently have just gone absolutely crazy. So it's super fun to have Kevin on the daily briefs on Tuesdays. And actually, he did such a good job. I was asking the community if they'd like to have him come back on tomorrow. I don't know whether Kevin wants to do another show, but I think the community really appreciated his contribution. So thank you very much, Kevin. Super appreciative. I always like to do, I like to get into this habit. Our site members themselves sort of got me into the habit. What are sort of my affirmations, my thankfulnesses, my gratitudes for the day? And I think I said today was Kevin, Kevin, and Kevin. Kevin, the student and all around nice guy, because he's such a cool guy. And by the way, today's the Kevin daily brief recap show. I'm just gonna sit and talk about how wonderful Kevin is. Kevin, the awesome trader, making bacon, trading up a storm. And then Kevin, the YouTube show producer, basically running the show. I mean, yeah. I there's my 3 affirmations. The all around nice guy. Actually, it's probably show producer, kick-ass trader, and all around nice guy. I swear, Kevin, someday you got to get your mom to watch these videos, and she has to know how impressed and how proud I am of you. And she better be damn impressed with you and proud of you. You're such a good man. Anyway, there you go. I'm sure he's sitting there blushing. Now, what do we talk about the markets? Keep in mind, tonight in the United States of America, they have a big political showdown, one of these presidential debates. And we have sort of mused that Mr. Trump is pretty behind in the polls, and he's got to pull off some sort of insane win through one of these debates to sort of right the ship for him. So there's lots on the line tonight. It should be fascinating edutainment, if nothing else. Kind of like these shows. I hope they get more upvotes than I do, though. Just kidding. And it's so cute. I love all of you and your social media and stuff. I love the fact that you guys are all like, Brian, don't worry about the downvotes. Quit focusing on that. You're wasting time. It's just nonsense. So thank you. I appreciate all your best wishes, everybody. As for the market, I think, given what's going to happen here tonight, I think it makes, and actually looking at our breadth indicator, it makes perfect sense. I'm leery about this crypto data. There's something obviously askew here with this, and keep in mind we're still building this out. Technically, our launch date is until January, so it's still beta. In fact, I even think it says beta on here somewhere. So, point being, on the medium term, this market is getting pretty darn washed out. We've been going down, on the medium term kind of stuff for a while. There are a few high flyers, Microsoft's, Amazon's, Facebook's, what do we call them? The mega, Google's in there somewhere. They've kind of skewed the big indexes. But ironically enough, actually, the broader market is pretty washed out on the medium term. And we noticed about a week or so ago that maybe mid last week or so that even the short term, it was getting really kind of, a lot of red here. So you can kind of you see how red here, the fast breadth indicator, and this is just off the S&P 500. So that's just this guy right here. You can see he's turned back up. So you could even argue there's a bit of a W that's trying to form in here. We should all respect what the message of the breadth is trying to tell us. We might get, a relatively placid resolution out of tonight's event. And the market's like, okay, business as usual, ho-hum. Politicians in Washington are talking about throwing, bucket loads of money at the market again. And we might put in a base and set another leg higher. Also, too, I am seeing things like inflation proxies are starting to perk up, and I think that's on the idea that, hey, the U.S. is actually going to do another big honking stimulus package. So I actually do like the idea that the market actually heads into some sort of crazy hyperinflation perception. I don't know whether it's reality or not, but hyperinflation perception peak into this Jupiter-Saturn cross event here this November, December. That would make absolute perfect sense. Exact same thing happened in 1979, 1980. Both that celestial event and the gold market basically going parabolic straight up into that event. So I don't see any reason why that can't happen this time too. And it sort of feels like the logic of the market completely out the window. People who are basically saying, forget about managing the situation. It's hopeless. It's the end of the world, right? Markets, of course, psychologically move toward apexes and momentum. I think that psychological mindset is going to hit an apex into this December event. And November, like the worst part about it is I think what happens here is that we have the political event in early November, and then we go through like a month of like chaos. And it's through that window that, if anything, we have to somehow try and keep a level head. It's going to be a challenge. Get ready, folks. As for your presentation, like I said, I generally like to keep the message relatively focused on a few markets, or else I'll be here all day. And specifically, things like the US dollar index, you can make the argument that we had a bullish ABCD objective hit there. We actually ended up fractaling out very politely. Even one might even argue looks very empire fractalish, and that fractal fired yesterday, and we're seeing follow through here on that signal today. Ironically, very cliche. Um, the harmonic traders of the world call this ABCD event level right there a PRZ, or potential reversal zone. This is a trade setup window, so really it shouldn't surprise us that pros are coming in and shorting that, looking for a correction here. So business as usual, pretty normal. The fact that it has fractaled here means that at the very best, for this to turn back up, unless we get like a outside upside key reversal or something like that, at the very best, this is going to take a little while to stop going down and actually start turning back up again. So yeah, now you may find that this actually turns into some crazy ass like a hammer bar by the end of today, but my hunch is probably into this event here tonight. You're gonna see this guy down near the end of the bottom end of the range here. So just a hunch, but with that fractal top having actual fired, I think that this thing is now pointing lower. Fascinating here in that this theoretically should be a risk on proxy. Yet we're not really actually getting that from a lot of these markets, and I'm just wondering whether this is just simply because we're in a bit of a vacuum right now here ahead of this event tonight. So stocks, they're kind of just parked, not really doing anything. Bonds, same sort of thing. So like stock market land, bond market land, efficient frontier, risk on, risk off. It looks like they're parked, but I think where the fireworks here today is in the commodities. We talk about risk on, risk off as expressed through energy prices, expressed through stock prices, and I'd also argue that cryptocurrencies really should be in this basket. I know, of course, that always is open for debate in this space. But if we look at that sort of risk on, risk off perspective, remember we said Bitcoin, bit of a leading indicator. It looked to me like Bitcoin was trying to W here, and somebody's just said, whoa, 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 slow down, slow down, slow down, slow down. Didn't really get any violent turn. Again, there's that sort of, intraday, we like to follow these kind of charts. And remember, I think I showed you this yesterday where this, yes, that was a bottom. I mean, it's a W, is a W, is a W. I mean, it's there. But this move felt more like just like short covering rather than like trending. I mean, especially this, right? Look how ratchety that is. And this right here, and this right here. So, probably if we look at like 5-minute charts, 1-minute charts, there's probably gaps all through all this that will need to be filled in at some point. So, dead cat bounce off the lows. And of course, we've come down a ways. Probably, going to start thinking about trend line breakouts. And if we can get W's on other sides of trend lines, we might get buy signals. But like I said there a moment ago, it felt like, okay, Mr. Biden's winning in the polls. COVID numbers are starting to ramp up. Econs are meh. Politicians in Washington don't want to do anything for more stimulus. So the market started rolling over, right? Makes sense. Then, we're on our knees. Of course, the options expiry. So there's probably some funny business around that being on a Friday. Then, hey, we've got this event that might change that sort of, that conversation about politics. Do we want to maybe just take some shorts off here and just sort of square up? And then, maybe we'll just strap the shorts right back on after the event. There's no sense in taking that sort of event risk. Keep in mind, there's a lot of traders in these other political event risk windows that actually look for trades on the other side of the political event window off of some crazy ass spike in volatility because somebody says something. So having the position on heading into that event, probably not, probably not even very wise, especially if you were short and you're up a lot of money. And maybe just take some off the table and just kick back and watch the fireworks. Who knows? I can imagine this is going to be one hell of an event here tonight. Pal, I think I want to record it on my DVR thing, just so I have it for posterity, just in case a fist fight breaks out or something. You're gonna have dentures flying in one direction. You're gonna have orange, sort of gray toupees flying in another direction. Probably Depends underpants are gonna be flying a third direction. It's gonna be fun, I'll tell you that much. Anyway. So I don't know whether I really want to read too much into the market, although something's going on with this total crypto market cap. Did somebody just pop here? Somebody's affecting that total crypto market cap number. Anyway, that just jumped out of me. Sorry. So I don't really want to read too much into what I'm seeing here today. What I really think is, like I said, position squaring, getting ready for the event tonight, and then let's see where the chips fall tomorrow morning. One of the things that really caught my eye at about when looking at the market this morning was our crazy crude oil. And if anything, this is such a great analogy of it's a trader's life. We started our fun little thought experiment back here, hunting shorts. I think we tried to short this M top and got stopped out. Then I think we were hunting like this reload zone and we got stopped out. And then I think we were hunting like this double top and we got stopped out. And then I think this is our fourth attempt. So actually, it looks like this one's working. So that's encouraging. And we had just simply said, I think on this one, that we were going to say we want to move our stop to scratch because we don't want this winning trade to turn into a losing trade. And you notice that the market rallied up to just underneath that level, put in a nice little doji empire, and now it looks like we're actually have an M top working. So interestingly enough, we could actually make the argument, what are you supposed to think if you see the market smiling at you? So crude oil still, this idea is still working away. I suppose our paper profit now would be from there down to there. But ultimately, we're thinking like 50% rolls. Now, I don't know whether this number is very realistic, but the chart that I'm sharing on the site, what the hell did I just do there? Get rid of that. I'll go like that. Where do I have you? You're over here somewhere. I think this is like the May contract. Boom. So there is that double top, and it actually turns out it was like a triple top, really pretty well defined. And I think we even talked about this as a 200 period moving average on the daily stop the bull. And now it looks like some sort of bearish bot's trying to play itself out. And fascinating, the reason why I mentioned that 50% level before is look at the low to the high, 50% roll. And notice that's actually a pretty important pivot level for the market. Key high, key low. So obviously there's some pretty importance about this. 37 bucks. And GWiz ABCD 37.41. And then also too, I don't know how relevant this is. I haven't really been working with this chaos level, especially 877. This is a number that some of our site members had actually sort of figured out as well, which I thought was super, super cool. But I'm not totally exactly certain the logic behind the 877 level. I do see it hit quite often. You can see how the market came down to 4669A and just stopped on a dime. But it's fascinating if we actually do now another fog and bomb off of this, because that M now has confirmed. Let's see where that takes us. And we'll put you up there. There we go. So that's going to give us 3528 area. So, and actually, you know what this might turn into? This is actually pretty cliche. ABCDs can come in various shapes and forms. And one of the A, B, C, Ds that I see happen play out a lot is it goes to the 1.618 extension level. Oh, look at that! So I got a sneaky suspicion this is where the crude oil market really wants to go. And if we think like parking garages, extension of this level, then that paints this target. I actually kind of like that thinking because what do I have on there? I guess I just do reload zones. Bang. So this is we would color this teal, right, for our parking garage. Then we would color this green for our reload zone. So hopefully you can start to see some serious overlapping levels. So let's see how it goes. But I thought this was really interesting because it's just such a great analogy. A couple of our short attempts were a bit of wishy-washy. It kind of got stopped out. And like I said, but we're going to ring the register when we hit the 50% level. This was our objective from the get-go. And we'll just add up all the numbers and see what the end result is. And this has been kind of a fun exercise too. I might even once this is all done, actually just go back and take the little pieces of all of the videos and put it all together as sort of this is a trader's life, very typical way markets go from rallying to correcting back to 50% rolls. So anyway, we'll see what happens. I think, though, what kind of concerns me a little bit about this particular setup here, just in the short term, is whoops, that's not what I wanted. There. I don't really like the way this bot's set up here. Very sloppy. So I don't think I could actually justify a trade on this. In fact, looks like a move. We had a move stop to trailing that 50% right there. This is the Foggenbaum level. Oh, no, what is this? Oh, yeah, that's a Foggenbaum. Foggenbaum! All right, so bot entry. Now, gee whiz, that's a very ugly entry for the bot. Bang, move stop to scratch. I get the distinct impression they're going to do some backfilling here. See that gap right there? So I might be inclined to just sort of watch as this develops, and I'd like to see a little better, especially on the other side of trend lines. Our rule is if we're really thinking short, we want an M on the other side of this trend line, not over here. So anybody who did take that 41.90 short, bang, 43, and gee whiz, that's exactly the low. I don't think that's an accident. So your stops at scratch. In essence, it means if we recapture this trend line, then these guys, they're just going to walk away. But really interesting commentary because like the stocks, there's some people that are chasing stocks right now. And there's some that are going up and there's some that are going down. The gold market is rallying here, and why? And I might argue that, for gold, for example, great analogy that usually oil and gold have to move in opposites. And you can see the gold market. Remember, we did these little scenarios for you just the other day where, again, I don't know whether this is a new bull market or whether this is just nothing more than we've got this fundamental event coming up. So anybody who is short and you see this big dump, you're like, fuck it, I might as well just take some profits. What's the point in taking the risk heading into that big political event? And this is just nothing more than a dead cat bounce, right? And dead cats usually bounce about 50% of their previous range. So that's what that level is right there. And it looks like this is just moving right along. And now with the oil breaking down, this actually is validated. It makes perfect sense. Is very normally, if energy prices are rising, metal prices have a hard time rising at the same time. And long and short of it, I think this is just playing itself out. And it's actually interesting because I think I told you the other day Julian was getting super bullish of gold. So nice grabs there, Julian. He's also grabbed a couple think we have one semiconductor stock that's rallying here. Congratulations on the trade. Charts like that scare the shit out of me because it's already moved up a ton, but he's a momentum player. And if momentum is pointing in the trade direction and it follows his plan, then really, if he didn't take the trade, I'd be like, well, wait a minute, you said you're a momentum player. Why didn't you take this trade? So the fact that he's playing these momentum moves over the past day or so on this little counter trend rally and making money from it, awesome, way to go. I think I've told you before, like in the face of this big honkin' M, a guy like me, remember, I'm chicken shit by nature, right? So every single trade I go, well, okay, how much money am I going to lose? How much money am I going to lose here? How bad's it going to get? That's how I approach everything. When you're young and you got a bunch of money in your pocket and you're a gunslinger, you sometimes don't worry about that kind of stuff. But I'm old. Hell, I got a 20-year-old special needs kid. I am a professional worrier. It's it's probably what I like to do. Motorcycles going off out my window. So, an old curmudgeon like me, I'm probably going to want to let this set up a bit more before I get, too overtly bullish. And as you can see, I mean, this is ideally what I'd like to see our track follow. We'll see if they can bring this thing back into the debate peak tonight. And that should produce a really nice, profitable trade for anybody who took that trade. Once the debate is done and we sort of settle down, can we start carving out 3 higher lows? And I can start thinking about serious gold longs. But for now, I'm just sort of sitting here, and with the debate coming up, position squaring on risk, probably position squaring on risk off, I think it makes sense what's happening here. I wouldn't even be surprised if there's some pros that are getting ready to hit this thing on the short side on any kind of euphoric rally. We've had the same kind of conversations about silver too, hitting that bearish AB equals CD. Shorts are still working. Target's 50% rule, dead cat bounce, empire bottom. Same thing as the gold, position squaring ahead of the debate tonight. Nothing really different there. All right. Let's see. Anything else we can add to the equation? Interestingly, I mean, so there's that gold move. Like I had said earlier, big cap stocks, they're kind of just stuck sideways. Not really a heck of a lot going on there. Oil already starting to come back a bit. I was really surprised that they did that today, too, of all days. EIA is tomorrow. There's no econs driving this move. Something really stinks about this, but we'll see how it goes. Gold enjoying that counter trend rally window. Silver, I think I showed you, counter trend rally window. In fact, actually, this gold looks like it gapped higher here, so probably going to have to come back, fill in the gap. So it's interesting to see the very powerful reversal on the junior market relative to the big stocks. Think risk on. So we had that big risk off vote there about a week or so ago. Now we got a big risk on vote. And really what I see is bottom end of the range, top end of the range, ping pong back and forth, back and forth. Did have some junior stocks perking up. If you look at the broader market, I think Kevin was even mentioning this today. Things like, where are we? Over here. This is the advanced decline line, or what's called the breadth of the stock market. Number of stocks going up versus some number of stocks going down. I mean, hopefully you can see a letter of the alphabet here that's coming in. The broader market, actually, believe it or not, like this, think of it this way. This is where the public is freaking out, right? And actually, this all the stocks are falling apart. Public's freaking out. Ironically enough, you can see the public has gotten back into sort of euphoric mode. Do you chase that euphoria? I don't think so. But until this does really, and actually it sure looked to me like this was a pretty powerful W, but it really hasn't translated into much. But until this thing really starts to rock and roll here, I'm not thinking the public's panicking at all. And then we look at things like the breadth. You can see this is the public panicking. This was back, March. And this trend is still very much working. Actually, the interesting thing is, right, that this actually, problem is these are moving averages, so it's a bit slow. What would be the best way to describe this for you? Um, Notice that this turn here happened in early March. See that? That's the end of February, early March. Now remember, the stock markets, right? We'll put the S&P 500 on here. So the stock markets were shitting their pants, even though the breadth of the market was actually starting to turn up here. So interestingly enough, while we're going on here, right, the breadth, the broader market is actually, you can see it's, the moving averages are Wing out. They're making higher highs. So the broader market is actually moving higher, even though the big indexes are still heading down. This is actually an awesome divergence signal. And really, what this breadth indicator here with the index making new lows and it not making new lows, it's saying this market wants to rally. And you tell me, did the market rally? I think so. So, it's a little hard to see this message, but the point here is let's just go and see what the breadth is doing now. Are we Wing? Kind of looks it, eh? If we start to see W's happen on the moving average here, this slower, kind of like what you see here, I think we got something to work with. So you can see that's a V bottom off a new low. So there's no hurry here. But I'll tell you, this is starting to look more like this than like this. And through this kind of market here, you have to go, oh, gee whiz, the little stocks have all jumped up. And, Brian's banging out doubles, all that kind of crazy stuff. May, June period, buy when it snows, sell when it goes. This is actually a tax loss selling deadline for people like in Australia and stuff. And then, of course, we had COVID nonsense to throw a big wrench in the works. So the broader market just has not really been that happy. But I get the impression we're getting very close to some sort of pivot here. And I think that probably is exactly like our breadth indicator. Now, keep in mind, this is only the S&P 500. I actually want to include all of these metrics in this breadth indicator. My hunch is if we included everything, you can see the currencies are still very, very weak. My hunch is probably is a little bit weaker than what this gives you, but that moving average I showed you on the breadth, it's sort of the same thing as our slow indicator here. This has got to start turning back up. The fast indicator is starting to say, hey, you know what? We might have something to work with here. And of course, we are in there nibbling, actually buying some stuff right now. So we'll see how it goes. Again, I just am leery about getting too excited about this thing all checking itself back to the zero line ahead of this event tonight. We might find that somebody says something horrendous tonight and the whole fucking market gaps lower tomorrow. You don't know. I mean, anything can happen in this environment. You could probably also make the argument that above or below the 50 line is probably a really good tell, bull or bear. So the fact that we are comfortably below the 50 line itself should tell you that, generally speaking, we're not in a very strong market right now. So, with that kind of backdrop, I don't think it should surprise anybody that I'm not really like overly enthusiastic about doing anything really here today. Looking at the corn in particular, I had sort of said just over the past week or so that I don't really have anything I can do here. And sure enough, you can see price is almost basically exactly where we were. Well, just what is that? It's like a week or two ago. So, well, at least 5 days. I still don't really have anything to do here. I suppose if you're thinking like bullish bots, we can drag that up to those highs. So now we have one low. Looks like this low from this morning. Excuse me. That low there is 10,63666. Interesting. This low here, 10 6 28 52. So that is technically a higher low. So we can keep this on the radar screen. I think that was, let's see, what high is that? 950 and 950. I think Kevin was even saying that he was trying to get short off of this level. Do you see, Kevin, how important this level was? Now, remember we talked about this? That number on stamp, $10,950 on the nose. Do you think that that was kind of an important level for somebody? I do. And notice that this person wanted to get the trade off so bad, they actually had to come back to exactly that same level a second time. And the guy's like, whew, I finally got my whole damn order filled. And then so clearly this 10,950 level, this is a hugely significant level. So as I said, as you're studying now, and again, I don't know what the hell's going to happen out of tonight. This thing could break either up or down here. I just don't know. Just like even a few days ago, I was like, this thing could go either way. I don't know. Sure enough, first they went down, then they went up, then they came right back down, then they went up, then they went down, and basically we're sitting at exactly the same point. I wouldn't be surprised if a few days from now it's the same conversation. But if you are thinking trend continuation, then now we can start projecting some levels. And you might actually get some actual hard numbers to be able to work with here. So there we go. So it looks to me, and I've just eyeballed this, I don't know if that's exactly correct, but it looks like to me that yeah, it's pretty close. And man, I've been talking a while now. How long have I been going? 35 minutes. I should probably shut up. Something like that. What's that low? 2852, 2853. Oh, one tick too high. That's close enough. All right, so 11,440, which would make sense. Remember, here's our GAN 1 to 2 angle. Geez, we sure have played with that angle a hell of a lot over all of this. So to see us back up playing against that angle, that really shouldn't surprise us. So if you're thinking about, hunting longs, and again, probably this develops either at or through that debate tonight. One low, two lows, you can see nice little level there. Give me a third low. Yeah, there's something you could maybe work with. And of course, what a surprise. This counter trend rally, probably if we go here to here, and then go here to here. Oh, wow, what a surprise. So you can sort of see how the market is like setting this up here. So we've got the reload zone. This is actually, ironically enough, if you are a bear and you want to get short, this is actually the level that you're hunting, this big red box. And now we've got this A, B, C, D takes us into there. And this A, B, C, D takes us into there. And there's our buddy that won that GAN angle. I'd say the odds are pretty good. We're heading up here, folks. We'll see how it goes. Obviously, nothing's guaranteed in this business. With this key low here now, I think we can actually, if you're thinking about shorting, I think you can actually work with that level now. So what probably ends up happening here, if we sort of highlight this, is this original neckline trend line structure, low to high level, that's probably a resistance. And then support here in the short term is probably this uptrend line support. And you can see that's the POC, right? So my hunch is, I think this kind of makes sense too, profile-wise. We're probably going to spend the next probably few days just filling all this in. It's got to look like a nice parabola when it's done. So there's your playground. Pretty well defined. So could maybe hunt lower time longs heading up into here. It's not a huge profit margin. We're talking like $600-700. Just be aware of that. And I actually do like the idea of this counter trend rally up into here. If we get a nice pretty M up here on a nice divergence, that sets up actually what I would consider a very good trade location to think about maybe buying some put options. Actually, it's interesting too because the boys are chomping on the bit for another one of our Cooking with Andrew shows. We should do that live on YouTube. It's a lot of fun. Andrew's such a good cook. Oh my goodness. Oh, so yummy. So, and also too, there's probably a really good analogy of trend lines. My hunch is we head up, we test that trend line, but our rule at TRI is we can't take the trade at the trend line. If this really is a bottom and it's a buy, then we will W on the other side of this trend line, which will, of course, negate short setups up here. Betting man, for whatever it's worth. I kind of like the idea of us rallying up into here. So if you're hunting longs, way to go. Then actually going and emming out on the other side, recapturing the trend line and heading back down. That's what I am expecting, but we'll see what happens. Only time will to help. So I hope you enjoyed that broadcast, giving you maybe some food for thought. Little junior ones, not going to be doing a hell of a lot while the big boys are still cleaning themselves up. So as a result, just big hurry up and do nothing. Okay, everybody, place your bets for the winners of this debate tonight because clearly that's going to be a huge driver going forward. Maybe don't take any huge bets ahead of that event. Let it happen and then be hunting. And of course, understand, they don't call it the fall for nothing. This is an incredibly risky market now, so be careful, everybody. All the best, PMA for the win. And the only thing left for Brian to say at this point is big. Kevin, can you take us out of here, please? Bye for now.